offering the Bitcoin, Ethereum, and Solana proxies. Proxies are popping up. I didn't do hype yet because the companies that do hype proxies are garbage so far. They are literally zombie companies going for gas for the air, so I didn't include this. I will in the future because now we have another developers supporting track everything. But first, I want to talk about where we are. This proxy revolution is insane. My third ever video is on MicroStrategy. I can say with certainty I was the first person ever to talk about a proxy and a very sophisticated trade proxy. But this is crazy. There are nearly 100 Bitcoin proxies, just Bitcoin proxies, and they own nearly 1 million Bitcoin. 921,000 precise. Do travels. Thank you for coming. The question is this, if anything, didn't it make sense? That is the so that's the reason. There's a couple of funky things happening today, and it's not by chance I'm making this video today because the strategy board shares. What the hell are they doing? Normally insiders typically sell. The whole gamut of MicroStrategy when I see everybody selling, it's a red flag. When I see everybody it's a green flag means, well, if they're buying, should we be buying too? Let's see. And MicroStrategy, by the way, the price on that. Fee, as we speak, is $13, up 3.2%. Now, this price is exactly $407.40. Now, let's get into said this will be the most important event in the history of strategy. MicroStrategy. Remember, MicroStrategy's been around for Bitcoin. Join. Say that comes in.
I'm an idiot.
For those of you who are old enough to remember the original Mad Max movie, this is Mad Math. Let's go. First of all, this is absolutely bonkers. 22 companies. I don't know why my little emoji didn't show up. And shout out to Huddle15 as well. 22 companies bought 52,019 Bitcoin this week. I'll repeat that. 22 companies bought 52,019 Bitcoin this week. Remember, only 450 are issued per day. Trump Media, the big bag too. Okay, $2 billion. And what's crazy is, you know, okay, is 500 million Bitcoin. MicroStrategy alone is buying 2 times the new supply. IBIT, just BlackRock ETF, is buying 3.3 times the new supply. And the other treasury companies combined are buying 1 times the new supply. Add those together, 6.3 times the new supply is just being purchased by these 100 players, give or take. It's absolutely insane. Way more than my highest expectations. And you remember watching me last year saying, guess what? Treasuries are it. Treasuries are it. Treasuries are the story of this Bitcoin bull run. And here we are. But other treasuries were not on a bigger card either. We'll get into those in a second. Now it's even more wild, okay, if it couldn't get even nuttier. We have all of these companies, and these are the planned buys for all of these companies. Planned buys, okay? Simply insane. You've got firms on there. Well, I put together a little chart to make it more visual. That's all the noise. If you want to hit pause and look at all the companies that have these planned buys. But there's big ones coming. We're talking multi-billion-dollar shops. We're talking companies that have MicroStrategy in their sights. They want to accumulate over 130,000 Bitcoin, starting from nothing. Remember, there's only ever going to be 15 million Bitcoin. And these guys are climbing all over it real fast. They've already stacked. 100 companies have already stacked million Bitcoin. That's 115.
Well, they have to sell that.
And it's going to get harder and harder to do. A visual of what this looks like in turn my camera off so you can see the chart and not me. You can see the big plan buys. MicroStrategy, big one, top left. Metaplanet, SMLT, Don J. Trump Media, GameStop, etc. All in all. Now, I know some of them look kind of small in terms of buys, like a little blip there for GameStop just to buy 33,000 Bitcoin, but that's a lot of Bitcoin, ladies and gentlemen. You got other players too. Trump Media have big plans across the board. All of these planned Bitcoin buys add up to, guess what? 1.5 billion Bitcoin on top of the 1 million Bitcoin they've already planned. And that is only the list that I have access to. There's a whole bunch more plans I am not aware of. Insane. 1.5 million Bitcoin. But let's talk about what happens when so-called treasury companies don't hold the Bitcoin that they make. This is a really cool little analysis to talk about miners. People want to hear more about the miners. Here we go. And in full disclosure, I still hold, I'm clinging on to my positions. They were very kind in 2023 and 2024. So far in 2025, with the exception of Marathon, this has been kind of like dead money, but great for covered calls. But I do hold Marathon, I do hold CleanSpark, I do hold Riot, and I do hold a little bit of Iron. I did sell half my Iron. Now, this is part of the reason why, because I think with the price of Bitcoin increasing, will support. And in Q2, Marathon held 100% of Bitcoin. They only had $5 million worth. GameSpark and Riot did sell a portion. Iron always sells 100% of what they want. So if you look at the math of this, the outcome with Bitcoin up there at 118,500, Marathon's up $49 million from their hodl. GameSpark is down $11 million from the stuff that they sold. If they had held, they'd be up. They would have lost that. Riot is down $27 million.
You want to plus persistent, aren't you?
So basically, in up market where Bitcoin appreciates in value, miners can make a lot of money if they can hold. I repeat, Delta, the gains on the bag of holding for Marathon, $49 million. The gains on the bag from holding Q2 Bitcoin for Iris is nothing. But their opportunity cost of selling was $38 million. Riot's $28 million. CleanSpark, $26 million. The net gain, $49 million for Marathon, minus $11 million for CleanSpark. Just let's put a number for the last one. Minus $27 million for Riot and minus $37 million for our friends at Iron. Again, HODL works. Now, in a bear market, HODL doesn't work. But the question is, will we get a bear market? Well, I tell you, if this list here of buys, $1.5 million of buys comes to fruition, there will be no freaking bear market. Mark my words, everybody. Mark my words. Bear market is dead. If these plans come to fruition, people are clear of that. That's not me saying there will be no bear market. No. There will be no bear market if these players buy 5 million Bitcoin. That's it. Simple. That's the power of HODL. Now, the other thing that just came on the radar, and by the way, I've never done this before, but now that we have the technology, we can do these as a monthly update for treasuries. Let me know in the comments if you're interested. Shout out to American Beijing. Hey there. But these are some new ETH treasuries, top 3. BitMine, this is Tom Lee's shop, and you can pump in the hell out of Ethereum. They own 566,000 ETH worth over 2 billion. SharpLink Gaming own 361,000 ETH worth over 35 billion. SharpLink Gaming, heard them. But anyway, I think it's a gambling site, not sure. The third biggest holder of Ethereum is the Ethereum Foundation. So BitMine is done with the foundation ones. But there is a little bit of bad news regarding the Ethereum Foundation because they are selling ETH like they've never sold before. Okay, they're dumping a lot of their ETH. Nobody is really quite sure why. Of course, they have to pay salaries, but I think Martoon was saying, is this what belief looks like? In the past few months, the Ethereum Foundation has dumped 26,000 ETH, over $100 million worth. Follow actions. So Martoon is interested in this and tracks this. But again, they've been selling into the rally. That's kind of a little bit right. Anyhow, this is another key chart as well I'm going to dig into. Now, everybody asks me all the time, what is NAV premium? What is NAV premium? Explain to me like I'm 12. So I'm going to do that. So imagine a piggy bank toy has $10 in it. Child has a porcelain piggy bank has $10 in it. And someone wants to buy that piggy bank for $14. The premium is $4. They're getting $10 cash, but they're paying $14. So they're paying over the odds for that $10. But this is NAV premium is 1.4%. 4%. So 4% is the premium. The extra $4 is because the investors think piggy bank is super special.
How did that happen?
Or has a nice
In the
wrapper,
car.
or might be worth more later. For
Yeah,
example,
stupid. I'm playing the shits, man.
More sats per share, 8.6x times more.
You get too
satoshis per
celebrate
share.
about it.
You bought a MicroStrategy share in August 2020 to today, 8.6 more satoshis. And companies like MetaPlanet are ramping very fast. So again, if you get in early, hold the shares, you get more satoshis per share. That is the reason people are paying a premium for these proxies. Other reasons, of course, include, for example, our friends in the UK. They don't have access to IBIT, or it's very difficult to buy spot Bitcoin. So they have to fly proxies like MicroStrategy. Shout out to all the Brits that bought MicroStrategy following this channel from the very beginning. They did very well. Anyway, let's get into more math. This is Bitcoin proxies sorted by NAV premium, ladies and gentlemen, all from a model. And I do want to say something. There's a few little nuanced things here. First of all, this is a live model that brings in real-time data. And of course, prices fluctuate. So we have Bitcoin shooting up, $300 since I did this. MicroStrategy is pumping a little bit. Again, up $3 since I started talking. So again, this is a static image of an hour ago. Now, a couple of other things people understand. You'll immediately see CEP. It's trading at a NAV premium of 0.03. Well, that's a special situation. That's a SPAC, which is going to roll into an IPO for CEP21 coming soon. The people that
you studied this.
There's a funky thing happening with the ranking here. CEP is not listed. And it's confused. Ignore this one for now. There's a problem with the calculation of this one. Again, real-time data feeds get confused. But we're going to go to the sol proxies. And at the very end, I do have all the actual proxies here. Let me just check this one real quick. Live TV, thing.
Live stream.
This is correct.
Let's take a commercial break.
The easy way to start exploring crypto. Your first trade, managing your portfolio. Crack it. Makes it simple.
Crack.
All right, I can fix this. I can put a live mode. Bear with me 1 second.
Oh shit.
Let me get to the other one first. Through this on the share. And pull out on the actual spreadsheet, which should be correct. But here, this is the sol proxy sorted. These are correct. UPXI is trading at 0.724 NAV premium, which means it's trading at a 27% discount to its Solana bag. DeFi Development Corporation 1.532, so you pay a 53% premium on piggy bank. And CYFRF Sol Strategy, you pay a 2.16 premium. So if you're buying $10 worth of gear, you're spending $21.60. Easy way to think about that. The UPXI model is bewildering as well. I have no idea why it's selling. They have 1.9 million Solana, and the NAV premium is minus 27.77%.
Yeah.
There's lots of weird stuff going on with this company. I'm not quite sure why.
I'll cut to Sol Strategies.
We'll get to the bottom of it. It's 28% discount over their bags. DeFi Dev is a 47% premium over their bags. And Sol Strategies is 115% premium over their bags. Now, proxies is where it gets interesting. Bitminer is trading at 1.86 value over bags. That's not 6% premium. XBet, which is that's WitsBet, Sharp, is 61% over premium over their bags. And I'm not sure Tom Means shop is more expensive, maybe because Charlink is not as well known. Now let me try to pull up this model. We're going to go to the Hover Model Live, and I'm going to show you the score, all the nav premiums from beginning to end. Yes, it's working. Hold on a second. Alrighty, let me just pop this up. Hold on, bear with me. View screen. Alrighty. Okay. Dismiss. This is so strange. Friend, there is a technical glitch with the MicroStrategy market cap. I don't know why that is.
Hey, buddy.
But I can fix it.
Oh my god, I'm so cockeyed. I'm fixing my settings or something.
The model is throwing an error on the market cap. And the market
What's
cap
going on? Nice shot.
of MicroStrategy is 123 billion. And there it shouldn't work. 123 billion. Just go right again until we get to where we are. Okay. All right, now I can share the. Sorry about this, everybody.
Well,
It's fun.
let's go. Watch, bitch. Guy got me.
And because I have to manually overlay, you can see here.
Nice surprise, playing more.
Strategy.
Let's look at the top.
It's trading at 1.65 NAV premium. That was down to 1.52 yesterday, but now it's rallying again, probably in anticipation of the earnings call. And the rest are ranked high to low. I'm not going to sort them because there's a problem with that market cap for MicroStrategy. Let me just make sure it's, well, it doesn't really matter if it's completely correct or not because directionally it's 1.6, 1.65, 1.7, thereabouts. Upexi is the cheapest proxy out there today at 0.69. I have no idea why it's at a 31% discount. Upexi is trading at 4.62. They own 1.9.
Oh, let me see if Upexi is out there. UPXI. It's dumping. Market's dumping because of Donald Trump's tariffs. Upexi is available to buy.
Million Sol. Semler also trading at a discount.
Upexi
No idea
gets
if it's
Sol.
at a 31% discount. Upexi is trading at 4.62. They own 1.9 million Sol. Semler also trading at a discount. The 8% off their Bitcoin bag. Semler. Marathon 1.02. Marathon has been trading at break even for quite some time this year. They have tons of assets, tons of energy generation that I'm sure AI data warehouses, data centers love to have. And they got a massive bag of Bitcoin, and they're buying another billion, and they're still trading at zero premium. It's bonkers. Fold 1.11, just 11% premium. DeFi Dev 47% premium. That's a Sol proxy. SBET 1.6. You can see that the Sol proxies and even the ETH proxies are cheaper than many of the Bitcoin proxies. Bitminer 1.8, Hut 1.86, Canaan 1.9, and Riot 2.15, CleanSmart 2.16, CYFRF 2.16. They're matching, but of course CleanSmart is a miner too, and CYFRF does a lot of validator type work too. DJT 2.26. That's Donald J. Trump Media, run by I think his sons. I'm not sure. Metaplanet 2.58, Galaxy 7.32. Galaxy also, you see the way the model just changed there as the prices changed, 7.31 now. Galaxy also had bags of Sol and they do OTC with, etc. They just sold 80,000 Bitcoin. Anyway, BTBT 135.5, etc. downloads. You got Tesla there too, 720.45, and Coinbase 89, because their market caps are very big and their hodl rates very small in relation to their market caps. So basically, that is the ranking of the different plays out there. All real-time data. Sorry about MicroStrategy not uploading. Very bizarre bug, but you can see the rest of the data is correct. So again, these things are all over the place. I have no idea why there is such discrepancy between these different NAV premiums for these different assets. Either way, we'll continue to monitor this. Let me know as well if you are interested in seeing more frequent updates of these different news.
You screenshot that for you, buddy. Thank you.
So we'll look at this and go back to the deck. We'll finish with meme du jour. We print money out of thin air. It's a funny little thing happening in the world today. And people are beginning to understand what the Federal Reserve is, and what the European Central Bank is, and everything else. And now people are popping up to the fact that, these people just pull money out of the air and print it like that's about it. And they lend it to you with interest, and tax you for using it, and then you spend your life trying to Bitcoin. It's different. So shout out to Carl Langer. Put this great little thing together, and I want to wish you all a good day. This is actually included in the Bitcoin on the proxy list. Because it's about proxies, and proxies are expanding way beyond Bitcoin. So let me know if you like this video. A lot of work goes into these things, and you won't find anywhere else. So subscribe.
Great job,
if you
James.
like this alpha. Big thank you to the mods in the chat and everybody here. K8, Sean D.
Still sleeping on just a mattress? It's time to add. The pod is a smart cover that enhances the...
I mean, okay, but you get the broader point I'm making.
Yeah,
you take a lot of, I will say, family network doo-doo for being bullish all the time. But you've been right. Like when you've been bullish and held strong and held fast, when others were cutting their S&P forecast, and gave you grief, you've been right. Do you worry? Is there any part of Tom Lee that worries at all? That worries at all that things are getting a little frothy?
Brian, we've seen markets get frothy and correct recovery markets for 35 years. So I went through 99. We went through 2019, 2022, and the 2021 top painful into 2022. And I'd say that signs of a top are really reckless use of borrowing at a time when cycle indicators are at a top. One thing to be mindful of in 2025 is that the ISM manufacturing hasn't stayed above 50 for 29 months. That's the longest stretch in history. So we know businesses have been cautious. Despite what people say is fraud, I mean, maybe the market community is quite enthusiastic, but in the general sense, because Fundstrat has 10,000 RIA clients and over 400 hedge funds, our community of clients is not that enthusiastic. I think it really does sync up with $7 trillion of cash that you see. People are cautious, and when people are cautious at the top, as you know, that's not bell ringing. That's generally more mid-cycle.
Yeah, I'm gonna give another stat here from. I don't want to steal people's stats, so I'm giving them credit. My friend and colleague Max Myers says that Meta and Microsoft now have the combined market cap of the entire Tokyo Stock Exchange. Every company in Japan, the world's fourth or fifth biggest economy, every company combined is now the same size as just two companies. Is that
Yes.
Are we that much better? Is our system better? Are companies better? We deserve that.
Well, I like Max's stats, but one thing Max should keep in mind is that if you look at earnings growth since 2019 to now, the U.S. has left every other country in the dust. India is the second closest, but almost 20 percentage points behind. the top 25 most profitable companies in the world today, 21 are U.S. companies. So there's a reason Microsoft and Meta work with other countries. They're leaders in innovation. And if we look at what really is the juggernaut of the U.S. economy, it's technology, and spearheaded by AI and now digital assets. But it's also financial innovation, and that's Jamie at the helm there. The leadership of these two sort of things driving the U.S. economy are kind of unassailable. So in my opinion, I think it's justified that these are the largest companies.
Not 110, 212% above its IPO price of 33. You heard Craig earlier, and we're all getting to, we've all been around the block a few times, Tom. We see that Craig was clearly nervous, right? He was talking about froth and comparing it to 99, talking about Apple. And I don't, Craig's gone, so I don't want you to go after him too much because he's not here to defend himself. But he had a point, I think, right? Like, there's no harm in being a little nervous when meme stocks are going up 40% a day again.
Yes, Craig brings up valid points. I was an equity analyst when Craig was at Bernstein, I believe. So we were peers at that time. And in the 99 period, the companies that were commanding these eye-popping valuations weren't really central to any thesis except that they were sort of named, whether it was pets.com, etc. What we're seeing in these pops, whether it's Circle, which was an astounding IPO, or now Figma, this is really a function of scarcity, right? That there is very few new ways for institutional investors and retail to get exposure to an AI name that isn't already in Mag 7. So you're right, there are places so if it wasn't levered, that's not the level that I was seeing. I think if Circle had round-tripped back to its opening price, that would be disappointing, but it opened at 77 and it's now at 185.
Yeah, and we've talked about three companies in the last few minutes. CoreWeave, obviously sort of for lack of a better term, leasing out space for AI. Circle, stable coin company, kind of new bank, maybe, if you will. I'm speaking in very general terms. And Figma, which as I admitted earlier, I don't use. I don't work for a startup. I don't know it for a job, so I don't know other things. They don't have anything in common, except, Tom, that a lot of people want to own them.
That's right. And there is what is obviously going to be price discovery taking place, because just because Figma is commanding this valuation doesn't mean that the 20 other startups behind it will get that valuation. We also know that the economy is changing rapidly because of AI, and so if Figma is a way for people to enable themselves and for startups to move faster in a world of AI, and then it itself is inherently AI, I'm not making any opinion or judgment on Figma itself. To me,
I'm thinking, sorry to interrupt, Tom, because I don't want to lose my thought, because in my age, I lose thoughts quickly. I feel like in my career, 30 years, doing this a long time, this is like the third complete transformation of business. The first one was literally, you and I are not the same age, but we say we watched the internet be created. Right? I was on a message board in high school in 1987. Right? We used to use a fake digital currency in the 90s down in Blacksburg, Virginia, in the Blacksburg Electronic Village. The creation of the internet was round one. The software is, that includes global crossing, like the physical build out. The softwareization, sort of round two, right? Where the World Wide Web became the visual medium, software was built. I feel like with crypto and everything else, this is kind of the third wave, and the history books will write about this moment. Is that too much?
I think you're spot on, Ryan, because we're really seeing actually sort of a dual movement at this moment, because AI and the digital world and ChatGPT have made people comfortable with sort of interacting with this sort of digital agentic world. And now there's going to be robots and things that are ingesting additional data. At the same time that the White House has really pushed the U.S. in a quantum way forward on digital assets using tokens, Today, the SEC wants to financialize the entire financial system onto the blockchain. But the blockchain is where everyone meets. That's how you control robots. You're exactly right. It's a really important moment, and companies like Figma sort of going to play a role. We're trying to figure that out, but you're right, and it's coming at a time when this probably strengthens the U.S. lead. So I know his next update might be that Microsoft is bigger than the entire continent of, you're one of the seven, and it may happen. Yes.
I mean, isn't it amazing how much Europe has just gotten blown away? Left on my phone. I mean, it's Germany. I have a lot of friends in Europe who go there for work, for pleasure. In a couple of weeks. They've been their biggest software company. I think it's SAP in Germany with a market cap of like 250 billion, and Microsoft worth $4 trillion. It's insane what's happened to Europe. They had their chance.
That's right. There's no other way to write a different narrative. Europe had a very different approach to innovation, which is really to regulate it, to prevent innovation and disruption, to protect legacy systems. And now it's huge bifurcation.
A lot of bureaucrats there in Brussels kind of overseeing things their own way. But either way, the capital's coming to America. The capital's coming to American companies. Tom Lee, you're the capital of the bulls. And we appreciate you because you've been right. We appreciate it. Tom, thank you very much.
They were talking Replit and Notion. And I'm just going to show you what this integration entails and why you should get started building with Replit and Notion. So in front of me, I have a Replit app. If you're unfamiliar.
I want to hear about Figma. Let's listen to this guy.
Hey everybody, this is Tanner and Bess here.
Just because I don't.
IPO day for Figma. That is not what this video is about, but in this video I will be using only Figma products to show you my presentation later of the EM&R and SPAT. I'm actually going to break down the math behind what dilution exactly is and how it affects the NAV per share, which ultimately will affect the price of the stock. And I want to layer that in and show everybody because this video got over 6,000 views in just a couple days, which I'm super grateful for. Thank you all for watching. But there's still many great comments that people thanking me for, and there's also some people on my questions. And so I want to answer some of those questions, but people are so scared of this big bad word called dilution. And ultimately, guys, dilution is not a bad thing for ETH treasuries. You got to remember that these ETH treasury plays are copying Michael Saylor's playbook to a T as what they've done with Bitcoin. But instead of Bitcoin, they're trying to do the same playbook with Ethereum, just at a faster pace. So dilution is not a bad thing. Dilution is just a way that the treasury can arbitrage the stock price based on its highs and lows, and then based on Ethereum's highs and lows, to issue shares at the right time and buy Ethereum at the right time to have a better NAV per share, an ETH per share. You're going to notice a lot of these, and I'm going to show you some videos of Joseph Lubin and Tom Lee talking about this ETH per share, like the amount of ETH that they hold per fully diluted share. And so let's go ahead and jump into the screen real quick. By the way, actually, I'm wearing a hat today because I got some Tom Lee hair going on, guys. That is Tom Lee hair right there.
This guy sounds lame, but I'm busy right now.
So, Ethereum, this week, we got 4% gain. Really traded flat. I mean, we've gone from 3,700 to 800 back and forth. But the treasuries have continued to trade down a little bit, which is not a bad thing if you're an investor wanting to get in certain scenarios because of that multiple on the NAV, which I'm going to get more into later, guys. I just want you to know that we're all in this together, and the main thing that matters is this: the price of Ethereum. No matter what, the price of Ethereum is going to dictate the share price, ultimately, of these treasury plays. If they execute at what we're trusting them to execute at, which is playing, the dilution game the correct way, doing it at the right time, buying Ethereum all the time, then we're ultimately going to have a share price at the end of the day. That's the goal. And just remember, too, guys, like as much as they're diluting us, and we feel like, oh no, there's more shares out there. That means my value of shares gone down. Guys, we're buying more equal is doing that. So, like, with the money they're raising, they're buying more. And they have more skin in the game than we do. They have way more skin in the game. So let's trust their judgment. If you want to invest in these plays, just know it's going to be volatile. Know that they're not scam artists. They're not out there to harm you or make you lose money. Ultimately, their goal is to raise the share price and raise the amount of Ethereum they're holding versus the fully diluted shares. We're going to get into that math here. Also, happy Figma Day. Today is Figma's IPO. I do have a video on Figma as well. On that IPO as well. Back to this. So, we talked about in the last video how I decided to buy Sharplink as my ETH Treasury play. As you see here, I am currently down 13%. I don't care because the MNAV is still at a good place, and I think over time this is going to go up, so I don't care. I'm not trying to time the bottom. I'm just trying to put some money in when I feel like it's correct time to put it in. Now, guys, I know last video, like 2 days ago, I said I'm thinking SBAC. Now, the reason why I'm thinking SBAC are these two main reasons. One, the transparency of SBAC has been a lot higher than the transparency of FINMA. And two, they also hired head of digital asset strategy, Joseph Challenge as the CEO, which I think if you're hiring a of the financial world, essentially. If you hire a guy that has 20 years of treasury, I think it's pretty damn good. They give us some shares or even more because I ultimately want the strategy to be decision making of what I'm investing in to be invested in the long run. So now, that being said, guys, I did buy some DMNR now, and I'll tell you why. I've unlocked a lot of it because the price went from about 35, 40 bucks all the way down to 28. A huge decrease in price this last couple weeks, so you can see kind of here 40, 28. All of a sudden, we're down to 30. So that's a huge dip, about 30%. The reason why, guys, my first video I talked about PIPE and what that means is that initial investment from private companies that are giving money to give. Basically, Tom Lee needed to raise money from 3 companies. He got the money. He said, hey, I'll give you a low share price. If you give me money now, we'll start to see treasury. And it got to the point where these shares, they were on until a certain date, which was like, I think it was July 30th, technically, but they released a message on the 28th, which is what caused the drop. Now, it doesn't matter. I don't care about that. I don't think you guys should care about that. That's how they raised the first initial 250 million in shares, and then they ended up doing an ATM offering, which I talked about as well. And this happening, guys. So it's not the stock raised this July 3rd level. The multiple in the MNAV was incredibly high. So what are they going to do? They're going to do an ATM raise. They're going to issue shares at this price. And yeah, if you're buying at that price, you might have got hurt. That's why you might not deadline in this moment. But you guys got to know what you're getting into. You got to know what the minimum on the MNAV is. Because they're going to keep doing this. If the stock goes too high and it's above where they project the MNAV to be, they will make money through ATM offerings, which I talked about in this video. I'm going to have that link in the description if you guys want to learn more about that. Today I want to keep this video focused on new things. So let's get into why I bought Bitmine. Because the number one thing I said was transparency. Check out so Tom Lee is actually on his YouTube channel for Bitmine. Bitmine DMNR is the YouTube channel. Definitely give this a subscribe. Tom Lee has come out with a chairman's message, which every single month he'll be, I'll let him say it actually. Just let Tom Lee tell you.
And I want to welcome you to the launch of a monthly video series called The Chairman's Message. The purpose of this Chairman's Message is to keep you abreast of all the updates of Bitmine as it builds the world's premier treasury strategy, or what we call the ultimate 5% once we reach 5% share of all Ethereum tokens.
So, you hear it there, guys. He is going to be doing a monthly video.
You fucking idiot.
Fun fact for his I think it's great that he's doing this for Vietnam, dude. How in the world what's going on?
Shit.
In this video, I highly recommend it's an 11-minute video. Check it out because he goes through from day one. It's about the hype for the initial investment. Talks about the ultimate bull case behind Ethereum. He talks about the government regulation behind the Genius Act. He talks about the bull case and why he believes it's going to go up in price. He also talks about the alchemy of 5%, how their ultimate goal is to get 5% of the total Ethereum within the world, which is fantastic. I mean, that's bullish in itself. And then he also talks about ways they can increase their ETH per share. So in this video, I'm going to be going over what ETH per share is, the math behind it. So stay tuned for that. He also talks about, I like the end because he actually shows the BMNR net asset value as of July 28th. So this is obviously going to change over time. And then he also talks about how they've grown in value. So Shark Bet, in my opinion, did a great job at managing the hype because when they got the initial investment, they had about a 30-day period to gain as much Ethereum as possible to raise that net asset value per share, to where hype actually didn't have as much room to go down because they had so much Ethereum on their balance sheet. It couldn't go under that $19. Now it's at $23. So when we saw that crash from 40 to 30, I think that was great because it could have gone from 40 to $5 if they didn't, get any Ethereum at all. If they just had their initial hype and didn't do anything at all, it would have crashed a lot further. So the fact that we're at 23 and it was at 40 is the reason why I don't want to stop at 30. It could have kept going further, so I don't want people to be only a scam artist. But that's not what it is. Now, I want you guys to know that ETH per share is the biggest metric, and you're going to hear this a lot if you're invested into these plays. Cares about ETH per share, and so does Joseph Lubin. But Joseph Lubin, in this video here, I'm going to show you it's only 37 seconds. Let's watch this real quick.
Same things and many other things using Ether is actually much more powerful because Ether is a productive and yielding asset. So we've been accumulating capital in various ways every single day. Instantly staking it or restaking it, and we'll take advantage of decentralized finance, building the we're able to take our Ether and grow it directly. We believe that we'll be able to accumulate more Ether for fully diluted share much faster than any other Ethereum project or faster than the Bitcoin-based projects.
Okay, so he said we're going to accumulate projects and certainly more than the Bitcoin-based projects. I mean, that is what we want, guys. As investors, we want to have ETH per share and we want the price of ETH to go up. That's ultimately how the share price of Sparkling Gaming and BMNR. So we got into Figma. So I'm going to do some more Figma products, but I did some work inside here. And it took me a long time, but I appreciate if you guys like this video. If you have any questions. But I want to get into the math behind the NAV per share. And everything in this video, I'm mostly pulling from the chairman's message that we just looked at from Tom Lee. So in this slide here, it says the DMNR net asset value detail, where it explains the math, which we have him pointed a arrow at $23 in math. And how did we get to that number? So you can see he pulls proprietary net asset value by theory they have. And so you can't just look at the numbers of the amount that you're holding. You have to look at the price. The spot price of Ethereum on the gold list was at $38.25. The Bitcoin price was at $102,000. They multiply those across. We have 2.3 billion dollars in Ethereum, 23 million in Bitcoin. So this is a little using than like Sharkling. Ethereum, so it's a little bit easier. But then you have their fully diluted shares, which the fully diluted shares were in the past was being a little bit, they weren't being very transparent. They weren't really explaining it. This is the exact amount of shares. Sharkling, well, that's kind of why I'm invested in how to over sharing messages, because I think moving forward, they're going to show the numbers and just be very transparent with us. So ultimately, that's how you get that share. We get the number here. So what does that mean? NAV per share. So the net asset value. Space there, a little bit of it. let's just say each. The amount of that are outstanding. And so Conley issued this in his message. And he said, go watch his video. Issue stock at a premium to the dollar value held per share. What he's saying is that DM&R stock really goes high and it's above their in-NAV estimate, really. They can do a ATM offering and they can offer shares at a higher price. And essentially, they're what we saw, guys, here. They did an ATM offering when this hit $135, and look what happened to the stock, because people freaked out. But really, people weren't understanding what was going on here. They were purchasing something because of hype. And then it's like, yes, that's smart. Like, that's what we want them to do as investors. But now, two, you can issue convertible bonds. So you can issue convertible notes, bonds in this case as well, or warrants to take advantage of volatility of the stock and the underlying security of the fee. So what that means is there are bonds. I don't know if too much into what happens, but today, instant loan money from the shareholders, where they can give you money today or in the future strike or future date, expiration date, and you can dilute your shares then. Right? And so really, they can get income from operations. So
there you are. I don't know, man. My shot is.
That's that really good. That will be right there.
Calm down.
If you have ETH, you can stake ETH to get more. So you can ETH.
No, fuck me. No, no.
So, yeah, they get such interest from it. They have more interest than they can get. So, number 5. Let's say treasury digital asset value.
Thing they're all bots, because I suck.
Sorry. Now, that means Lee is saying, hey, I can go buy that business because I know my company right now is trading at maybe a 1.4, and they're trading at 1.1. I'll just buy up their ETH, gobble up.
Gobble up.
So I have some scenarios here, right? So I'm going to show you exactly how all this works. So in this, you guys can see that they have 600,000 ETH at the spot price. This is the asset value. So we know that equation is net asset value divided by we're going to take 600,000 multiplied by that spot price to get that 2.3 billion plus their Bitcoin in cash divided by their fully diluted shares. So that gives you this equation. And then I calculate that across to get their NAV per share. And this is exactly matches up with that.
You giving anything out up here, bud?
22.84. Now, this is what Conley's saying is, well, first, let's calculate what is the price to NAV, or the multiple on the NAV. So,
Tasty boys.
share price, which I'm going to use this share price, guys, at $32.33. And the reason I want to use this share price is because I bought these shares right after I saw Conley's message from this video. This is what released right on. So in this video, we have the 22.84 NAV that we just looked at, and my share price. So when I calculated this to purchase, is at a 1.42 multiple on the NAV, or you can call that price to NAV ratio. So that is the current for as of July 28th. The price is not 6%, but that is the NAV at which I purchased my share back. And so I can show you if the price of the goes up, I'm going to change this how it got that and the price of the stock. And so you can see that it's probably going to happen. Obviously, it's going to go up. Shares is going to go up. So this scenario actually going on. But I just want to show you that the price of these does go up. That's the price today. So what we can do is we can take a new spot price, which I put $5,000, it goes up to 4,000, 3,800, and 5,000. And so we'll calculate them Thursday that we the same amount of shares. And we have a higher net asset value per share. And so what we can careful if the end of the share increases. So if Ethereum goes up, but they're trading at the same 1.4 say that, does not affect the price. So let's say 28.84 is their NAV per share, times 1.42 in NAV, we're looking at $40.95 per share. So you can see how that's gone up from where at $32.33. So that's how the price will go up ultimately, guys. It's the price of ETH. Now, talking to the board and saying that he thinks a multiple on the NAV will go even higher than 1.42. In his mind, he thinks it will be higher than potentially MicroStrategy because MicroStrategy, right? And here it's trading at 1.73. Earliest days was at a 1.7. And so this is calculated in real time by MicroStrategy. Transparency here. I hope that will do this as well in the future, and I'm going to post their real-time data. Say, what happens if the multiple on the NMAX matches MicroStrategy, and everything else stays the same? The price of ETH went up to $5,000. Now we take the NAV share, right? So we have that $28.84 per share. And at 1.7 NMAX instead of that 1.42, $49 drop price. So instead of the $40, it's the ratio of the so now, guys, I have a third scenario. Now, this is
Stop shooting at me.
By the way, are based off my last video where it was actually a report that stuff came out with called the Trustware report. The consensus came out with the Joseph Rubin company came out with a Trustware report saying that they think that their projections based off the returns, they think by 2025 the stock price or the price will go to about $5,000, and that's the current base case. And the 2028 it's going to be a base case of 15,000. So these are based on their projections. Now, let's use 15,000 as a stock rate.
Oh,
Look at this though.
it's so bad.
Same amount of share price if NAV stays consistent, but not per share. 79.6 times 2. So it's the same in NAV as we're trading that iPhone shares at.
Hit you online here. It is not online. Don't give a fuck about the Figma IPO. I didn't buy it.
Top 5 deals for 2025 fantasy football. Isaiah Pacheco. Most of you probably remember Pacheco's less than explosive end of last season, but he was returning from a fractured fibula. He's had a healthy offseason and is available in the 7th round or later. Ray Davis. Games took holdout teams improbable, but Davis is still tied to one of the best offensive lines in the league, and the Bills are projected to score the most points. Jalen Waddle. A great season out of Waddle means we need a fully healthy year out of Tua, but things are lined up to crush his ADP. Darren Waller isn't Jonnu Smith, Tyreek is aging, and Waddle could still be a wide receiver too if neither of those things help his cause. Jacoby Myers. G.T. Bowers will be the engine of the Raiders offense, but that is baked into Myers' ADP. He makes a great volume play with Geno Smith, yet he's priced in the wide receiver 40 range. Jaden Reed. Granted, the Packers added the wide receiver room, and Reed was a bit of a headache in fantasy last season. Regardless, he still has weak winning upside and would be a fantastic 3rd or 4th option.
assistant this guy.
So we are the first ever sensory-friendly restaurant in Canada. So we hire neurodivergent.
Not only is crypto offering them an opportunity, but we're seeing the rise of the speculative economy. And we're seeing it in prediction markets who are in this trap. They're deep in the middle of this trap.
I do think the second half of this year will be a explosive move.
And you really
second half of the year, how old is this?
If Bitcoin were to go to, say, 500,000 by the end of this year, I'm thinking, I'm just saying if it did, because of a short squeeze, which I think is going to happen at some point, all people realizing that it is a finite asset, and there are people that just borrow on it because they got in trouble from 21, 22, and they're borrowing future production, blah, blah, blah. I see it. Now we've gone through this. If we get a spike, well, that'll put it at $10 trillion in terms of Bitcoin. You'll have the entire ecosystem go up. I just have this belief that instead of this being a boom, I view this as a disruptive shift in money that has to happen at a time, not when the fiat system is doing well, but when the crypto thing is doing so well. It's not based on speculation, it's based on transfer of money.
With no way out of the debt cycle, more and more people have turned to crypto. Bitcoin is now pressure point. Just a short squeeze could send it straight to $500,000. That's the latest message from high-level investment analysts Raul Pal and Visser Jordi. In a recent discussion, Pal and Jordi shared a high-conviction outlook of where global liquidity is headed and how crypto fits into that macro picture. They believe we are entering a phase of accelerated capital expansion, driven by aging demographics, low productivity, and rising sovereign debt. As a result, liquidity is flooding back into the system, and crypto stands to benefit more than any other asset class. Pal and Jordi see this as the start of a new cycle, and they argue that the repricing of crypto assets could last well into the next year as the macro tailwinds continue to build. Make sure to stick around until the end of the video, as Raul Pal, together with Visser Jordi, breaks down the signals they're currently tracking and the structural forces driving this next phase in crypto.
As people are realizing that speculation is somewhat warranted because there's no other way around it. But it also leads me into, well, the good thing that speculation is doing is testing all these things in crypto, these new ideas, they get tested like memes, which is like capital formation, instant capital formation. And also, humans, if we're not in a job, we still speculate. I don't know, this big rise, this speculative economy, I think is a big mega trend that people don't really see. They're too cynical.
All you have to do is go to the Fred database and look at the chart of gambling as personal consumption expenditures of gambling, which is now over $200 billion a year in the U.S., and it's a perfectly linear incline. And then you go and look at how much money is spent on new cars in the U.S., and that is on a decline. And the numbers right now for new cars, personal consumption expenditures, are over $250 billion, and I'm sure after the tariffs will be even lower. It means gambling is just taking over as a major part of the economy, which I think everyone knew because they can see it on TV. They realize there's fan duels everywhere. But I don't think people have gotten to the point of why. And I do think it is a very major thing for younger people because of the boredom. It's a form of education. They view experiences completely different than we did. And at least they have a chance of getting money, where if they spend money on an expensive dinner, it's just lost. And so I do think crypto falls into that. I do think needing real-time information, real-time pricing, doing things when you want, it all fits in with the faster world and settlements of money, everything. So I do think it's a representation of faster than matches AI. It gets into the habit towards where they want.
The landscape of the adoption now we're seeing
Ready to explore crypto? Start your journey in just a few taps with Kraken. From your first trade to managing your portfolio, Kraken makes it simple, secure.
So I think this year, and really the last, I want to say 18 months, has been about accepting the gradual acceptance of Bitcoin as something which will be here 5 to 10 years from now. So I think everyone...
Remember when we first met, you were still struggling to explain to traditional hedge fund people and
finance people that this was meaningful. They thought Geordie was a nutcase, and now suddenly everything's changed. Right? I mean, you are a nutcase, but that's separate.
That's completely separate. Bitcoin is being accepted more and more every day. What is not just being accepted at this point, and actually this is a good place for us to talk about, because I've said this on my YouTube videos, but this feels a lot in the altcoins like .com bubble to me. It feels like there's a lot of people that got involved. So think of the internet from 95 to say 2000. A lot of people joined into it. They left banks. They got involved. And they were hoping to make tons of money. It was a free thing. Everyone got involved. And then you had this big fall. And it took a while to come. It took a while for the NASDAQ to get out of the problem. One of the reasons it took a while to get out, just like it was in Japan, banks and shares, lost everything about this overhang. People that had gone into something, every time anything goes higher, it seems to be the wall of supply that stops it from the crypto community. Now we've got circle enthusiasts. We've got people who disagree. So I'd say the traditional finance world is getting excited. Now you've connected in the last week. You've connected to Core Scientific. So now we're getting some of the Bitcoin miners back involved. All of a sudden, the traditional finance world is starting to see things and said, Ethereum breaks out because of the network effects on stablecoins, which I think is there. Until Ethereum breaks out, just another OG of one of this, and people start getting on board, I don't think we're going to have to kick off to, I believe, will be the end of the dot-com bubble overhang, and I think that's what we have in crypto from the 21-22 period. A lot of overhang, it seems like there's a lot of supply. Once we work through it, we see the entire space this year.
Yeah, I think you're right. And I think breaking new highs is probably also Solana breaking new all-time highs because it hasn't broken where it was. And that is a mass wealth generation event. You know, there's a lot of people involved in this. There's a lot of fortunes to be made, and that creates a whole new cycle of reinvestment and opportunity, risk-taking and stuff like that. It feels like it's coming, and that is. I mean, most of my work suggests that this year should continue, and maybe even the first 2 quarters of next year.
Economic pressure is forcing people to take risks they wouldn't have considered a decade ago. With wages lagging, debt rising, and access to traditional assets slipping away, speculation has become a survival mechanism. In the U.S., gambling spend has surged past $200 billion annually and continues to climb, while car purchases decline. A clear sign that speculative behavior is replacing conventional consumer choices. Crypto fits this environment perfectly. It's fast, accessible, built for real-time participation. According to Pal and Jordy, institutional confidence in Bitcoin continues to grow, but altcoins are still constrained by leftover supply from the last cycle. That weight may finally lift if Ethereum and Solana break past their old highs. Once that happens, a broad short squeeze could hit the entire crypto space, pulling in fresh capital and triggering the next round of wealth creation.
I'll be back for you. One of the things that we have done the work on is that the main driver of this season, as you call it, is actually the business cycle. And the business cycle is the same driver as small caps versus big caps. It's EM versus that. It's junk versus, it's always the same trade. Because once the business cycle picks up, people have earnings, they go further out the risk curve, it gets reinvested. Why has the ISM remained so low? This is I've looked at this for ever, for our whole careers. This is the longest period below at 50 in the history of the ISM. It's never smell.
So I remember sat next to each other. You've heard me say this. In fact, I remember when
I know there's no business cycles. I get that.
Correct. So here's the part that I'll say. It is the problem that in a world with artificial intelligence, there should never be a time that the ism takes off. It just shouldn't happen, in my opinion. Now, I'm going to change that a little bit. I do think we are closer to something which is related to the business cycle of AI. because at the end of the day, if I equate cycle power, you have to be building something, and oil has always been. It's that macro piece that offsets, and it's out of control of monetary policy and fiscal policy. You need power. That is the thing that needs to fuel it. And AI consumes an enormous amount of power. We are going to start to see, it's ironic I say this in Southern Spain, but we're going to start to see important blackouts. And there's going to be more in the U.S. And I think they're coming very, very soon, because I don't think people are at the exponential move. And this fits into the off-season side to me. So I believe we are going to see a change in the business cycle. I just don't think they just push button way that they did, where you do something in the economy. I do think it's coming this year because of what's going to be needed for the infrastructure build out, data centers. These are massive numbers. It's going to be a change. I just think it's going to be quite incredible.
Middle America, the media.
This is podcast. First, versus six. Intelligent, effortless. It doesn't replace your bed, it transforms it.
You son of a bitch.
Responds to your needs, adjusting temperature, elevation, and sound while you sleep. Built to give you all-night comfort with an adaptive sleep service that fits onto any mattress with personalized temperature, so you and your partner sleep just the way you. Pod 5 features a new hydroponic that wraps you whole body immersive temperature, giving you double the heat. No more overheating, cold wake-ups, or leftovers. Just deep, uninterrupted sleep.
Person has had their mortgages up here, their car payments up here, their credit card payments here. They're still like this. Yeah. Right, the stock market goes up, a bunch of rich people get richer, and sure, their pension plans might be going up. That doesn't make a difference to their pocketbook. And the moment they start cutting rates, rates to fall, people will find their
You died, bitch.
money will flow.
I think what Trump is saying to everyone is that he wants to make us move rates as close to zero. That doesn't matter. I think the rate cuts that we did before were a normalization rate cut. So we overshot and it was to a level where you can make the argument. Now the next rate cuts to me will be the actual rate cuts that we were expecting, and that would be the trigger for the business cycle. And it will come at a time when I really do believe we are underestimating how much that is going to have to happen to deal with all this compute. The full self-driving vehicle, and AI native phones with battery packs. I've tried to explain to people in my writing how much hardware is needed for the embodiment side. And I think you're seeing that with semiconductors. I think semiconductors are the origin of this, generation. And they're breaking higher and they're broadening out. It's not just NVIDIA, it's the analog thing. I think that's in preparation. So I would be using, and I have in the past, and I'm sure you have too, if you haven't seen this, so far the stocks relative to the NDX having its best quarter in the last 25 years. And I think that's a big off phase, because I think for a true business cycle scenario that you're talking about, semiconductors should outperform software. That's what's necessary.
In the end, where I get with all of this is somewhere down the line, Marshall has and therefore infinite abundance of intelligence plus humanoids. And so what is money at that point?
Well, now you're getting into the point. If I told you, and I'm not predicting this, although in the back of my mind I've decided, I don't know if you've ever done this, I've decided not to predict publicly where I think Bitcoin is going to go. But I do think the second half of this year will be a explosive up move. And I say explosive because I believe the most important thing that happened in the first half of the year was what Sundar Pichai said on the Lex Fridman podcast, and also he said that from a year ago, we are up 50 times in token usage. Okay? Now, if you ask 100 people on Wall Street what's a token inside AI, 99 of them will know this specifically. When I hear tokens, I think AI adoption, I think inference, I think reasoning, I think AI agents are just starting.
Jordy Visser believes the second half of the year could deliver an explosive upload, driven by the rapid acceleration of AI adoption and the massive infrastructure demands that come with it. He believes AI token usage could increase by 50 times as reasoning, inference, and autonomous agents begin scaling across real-world systems. This surge in compute demand will require large-scale investments in energy, data centers, and hardware. Initiatives he expects will be supported by government funding. As interest rates decline and liquidity returns, capital may flow directly into sectors tied to this transformation. In his view, crypto is positioned to benefit from the speed, scale, and structure of an economy increasingly shaped by AI.
I'm
Do
doing
you
a
agree
job
with his
running
outlook?
this game.
What about Raw Pals? Let me know in the comments. Anyway, guys, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video, and that it gave you some value. I'll see you all at the next one, and as always, all the best.
Where you shooting? Where you be shooting from?
Everyone talks about backlinks, but no one knows about
You can spot it,
I
sucker.
can't find this launch a new feature called brand links. Brand links are specific link services offered by Shopify and providing businesses with direct access to high authority, well-reputable websites. So what's the purpose of it? First of all, it boosts your SEO and brand visibility. Secondly, you will be able to publish your content into top-tier websites.
Come on. Baby. Baby. Oh shit. Oh, sweet. Ah, you fucking cunts. Fuck. You learn anything, sir? Elon Musk reveals the next big
In
thing.
terms of the value of infamous, you really need to think of the basic question: who wouldn't want their own personal C3PO
It's literally
R2D2?
changed.
I think we would deal with that. I mean, let's ask the crowd. If you guys like, you guys want an Optimus? Yeah, exactly. It'd be very cool. It would actually
And
be
you fucking outsourced Grok
better in
to
functionality than C3PO and R2D2. So
XAI,
it
which
would be
was
super
privately.
So I think basically
Which is the
everyone
brain.
is going to want it. And you're going to have a bunch in industry
Crazy.
So that's why it's probably really good product, because there's a amount of probably 20 million could be people get on the line. So, hypothetically, if Tesla's making 1 million of these here at scale, and at scale the cost gets lower and lower. So maybe it'd be like on the order of $8,000. I'm just guessing. And put each billion in revenue.
Insane. 30 quadrillion zillion billion.
And making a billion robots a year. Yeah. But I do think something like that may happen.
What would you say is Optimus going to have the biggest impact on? Do you think it's going to start obviously in manufacturing, or at what, not necessarily timeline, but like where do you see Optimus having the biggest impact?
Well, initially it would go to very high value
This is fucking music.
So, say somebody needs a lot of medical care or something, Optimus could be like a 24-hour day for helper to someone that is quadriplegic or something like that, or something just really it needs physical help. So that's the kind of thing which would be life-changing for a lot of people. Those would be the highest value initial use cases. They would also be used in situations where the work is very dangerous, there's a lot of repetitive tasks. But like any work that's risks life or some kind of injury, would be a good initial use case for Optimus.
When you look ahead in 10 years, what's more transformative? Full self-driving? Optimus.
Optimus.
Seems like that was an easy one.
You've hinted that we may reach digital superintelligence this year or next.
Yeah, it's not going to
We
happen.
know that we've crossed that line, and what does day one of AGI really look like?
Well, I'm not sure. It may be less profound than at least less profound. Like what AI has not done yet is add new technologies that are useful. So it hasn't discovered new physics, and it has not invented technology.
SEO companies charge $2,800
$2,800.
a month for SEO
2,819. That's specific, very specific number.
Grok becomes smarter than any human.
What role do we play? Are we co-pilots, overseers, or just legacy code?
So,
Which is across be many analysts, but there will be at least, I think, 4 major AIs, maybe 5, just in the United States. And so even if Grok was not developed, it would still be potential superintelligence. And I've been fighting, especially for driving more on digital superintelligence for a long time. Because I went this is a double-edged sword, a single-edged sword, or what. But it became very obvious after a while that this was going to happen, whether I anticipated or not. So therefore, I had a choice of either be a spectator or a participant. That's what
just started a competing company to Tesla.
So then, I think, well, yeah, I'd rather be a participant than a spectator. And I can focus on AI safety, which, in my view, is that the most important thing for AI safety is to be maximally truth-seeking, which is often like saying things that are maybe politically incorrect, but actually factually correct. And also, there will be mistakes that are made, and admitting mistakes, and taking corrective action. And Rock still has a long way to go to actually truth-seeking. I think this is also consistent with technologies, solving medical problems. If you want to cure cancer, you have to be actually truth-seeking to understand what the root cause is, for example. So I think it's actually very fundamental for safety and for and I think it's going to look quite different from where it is today. And AI and robotics, in the good scenario, for sure, working with try and ensure makes that we do have a good scenario. I'm sure that products and citizens, or anyone, basically anyone will be able to have any products as much as they want. The productivity gains from AI and robotics are just astounding to think about. I think it could increase pace besides the economy by a factor of 10, eliminate have anything they want. The bigger challenge may be finding meaning in life. So if a robot can do anything that you can do, but maybe better, how do you find meaning in life? That may be the biggest challenge.
When you think of the fact, you mentioned that, you've been holding off on really getting involved, whether it's participating versus being a spectator. And when you're thinking of the next couple of years of, let's say, not necessarily catching up, but doubling down and really focusing on it, what are going to be your biggest focus points?
Really, it's making it useful and making it safe to humanity and making it essentially. I mean, you want it to be useful and friendly. I've never seen any technology advance as fast as AI, and I've seen a lot of technologies advance.
Yeah.
I can't call it, and maybe this is a discomforting metaphor, but AI is a supersonic tsunami.
Doesn't that sound fun?
In terms of exceeding prior technology, it's like a supersonic tsunami. And you really do need to pair AI with robotics.
Yeah, I think it's crazy just how much it's advanced in just the past year or 2 years, and seeing how kids are using it, using Grok Voice, the companions now. I think you've answered this before, but what keeps you up at night when you think of the future of AI? And now that you're doubling down and really just going wartime mode right now on tackling these issues, what is something that keeps you up at night?
Well, AI and making sure that AI is aligned with humanity and wants to foster and grow and better humanity. And basically, you want to be like, if you look into a crystal ball and see the future, you see the future. And so I have this kind of like term or the goal of Tesla. The goal of Tesla previously was accelerating the advancement of sustainable energy, which is like a very good goal. And then the reason I pursued that rather than AI, because I could have pursued AI from the beginning, was because I was confident that sustainable energy was a single-edged sword. Only it's like it was a good edge. So I'm pretty sure that if you succeed in that, like, okay, that's
so effective that it helps patients with alopecia grow back their hair as they've gotten older.
That's definitely good. Sustainable energy, by definition, is great. You get cleaner air, and and I can run out of whatever the supposed fuel is. Combination of solar batteries and electric cars. Then that's and I don't for AI, like I said, it is more of a double-edged sword risk. But I think it most likely will be good. It most likely will bring immense prosperity, and it's going to figure out how to cure every disease. And probably going to be one of them. I think we need to be careful and not complacent, and we should actually be somewhat paranoid to make sure that we have the good AI future, not the bad AI future. So, I mean, from a Tesla's standpoint, I think started with autonomous cars, and especially with Optimus, this go to sort of crazy levels. I always recommend like looking at Kathy Wood GPS analysis, right the mass, and I think they're right this time. With a lot of difficult execution, I think Tesla's valuation could be $25 trillion. That's probably correct if we execute well on autonomous transport and Optimus. It actually does get to a $20 to $30 trillion valuation. That's 20 to 30 times what it is today. Everyone's sharing that is clear. So it's just a massive amount of work. I think if you do that massive amount of work, that's what will happen. But I'm convinced that Optimus will be the biggest product ever. Yeah. So, and then of course autonomy is starting to roll out.
You fuckers doing nothing.
Cardinals will be in many cities and throughout the United States later this year, and hopefully many countries next year.
You want to how would you describe the relationship with that man? How do you have information when he's pushing for something that's possible? Working with you on fun. To have a boss that understands you,
physics level, engineering level, super cool. I think that drives the culture in our company and our conversations, that she's always grounded in like, is this possible? How do we do it? What can we do? And I don't shy away from tough discussions with them if we have to have them. What I know is talk to Elon about what we're talking about. It's easy to see that out real quick. And so I always try to stay grounded in conversations with Elon, and I found that we communicate there's respect for each other. Always ask to be harder or to make sure that we're innovating more. At the same time, like people trust with each other. It's just a great team. I just shit on it. So
Tesla is expected to debut on the platform. What are the key design and engineering challenges in building meant to operate without a driver?
Yeah, there's no steering wheel. It's just hard to test.
I can't imagine.
Because it was kind of a fun thing. Because when you develop a car, it's like the first thing you want to do is make the wheel spin. So you have it on a lift, and you're like, okay, the wheel spin. You're like, okay, now you got to turn the wheels. Like normally that's easy when it's mechanical connection. The Cybertruck was a bit harder because there was nothing connected, so we could do much code. In this car, we were like, how are we going to drive it? Like, we have to test it, crash it, do stability control, do firmware development. So if you see the RC fleet running around with steering wheels, that's because we had to figure out how to test it. That's just to test the feature only. And actually, I think it's straight out of the Cybertruck wheel, so it's not even a slow thing. But that definitely made it hard in engineering to design it to be steering wheels, and also figure out how to test it. So it's definitely a challenge. The other big challenge I'll say is efficiency. There's a watt hour per mile on that thing is super slow. So, getting the most out of every dollar per mile. And I think that having this balance of okay, but now that a human isn't driving it, let's take away some of the into cars because humans overshoot because their steering inputs and their braking inputs are aggressive. Autopilot's once with that margin and smooth balance between
B-ranking
back efficiency, and things like the tires, while maintaining a super safe.
This is Kraken, the easy way to start exploring crypto. From your first trade to managing your portfolio, Kraken makes it simple, secure, and all in one place. On-ramp in minutes. No complex.
Reliable vehicle for autopilot to drive because it's also a driver. The FSD system is basically a driver. It wasn't complicated in our first go, and so I think that it's going to be a great product and it'll be super good. But I think we can go further. I think we can do more. I think we can make it more efficient. I think we can make it ride better. And then I think we had to just take a baby step, a cautious step into this first effort of no human loop.
So during our prep call, we talked about your title. It's head of vehicle engineering. That title is actually not quite accurate because you're actually responsible for Optimus.
Yeah, this is a little bit weird. I'm not responsible for Optimus. Let's be clear about that. You might see manufacturing for Optimus and testing for Optimus and actuators for Optimus, and the vehicle engineering the least title because I have all the manufacturing engineering, I have all the automation teams. That's a super strength at Tesla because you don't have silos of things that or only work on Optimus, or only work on energy. We all are the same set of engineers, and so I think that maybe at some point I was only in charge of vehicle engineering, but I don't know when that ship sailed a long time ago. And also there's hiring and technicians and I just represent them in situations.
Shit.
Shit about various projects and when you realize how broad you can go because of what you're working on, it's wow, that's super powerful and that I don't know, kind of something.
You need to come up with a new title, Elon Technology. What's been the biggest difference working on? I mean, obviously you guys build a machine that builds the machine, but when you think of vehicle engineering to now building robots. some of the either the learnings from taking a car to versus a robot?
Yeah, I mean, I would say trying to build Optimus and manufacture it is at precision. The human body is amazing. Once you start designing a human robot who's sitting in the room, just hold your hand up and you're like, how do you do that? You move your joints around and try and figure out how to emulate that mechanically. It's really hard. The human body has some amazing things. The team visited a hand surgeon to figure out how the human hand worked a little better, and it's crazy to watch it and see what the tendons do and how the muscles pull them. When I was growing up, I always saw working in cars as a bit like being a surgeon, because you got the hoses and the fluid comes in your engine on one side and hot goes out the other. It's kind of like the heart, and it is not at all the same. It's very difficult to get the precision you need and the response and the tactility, as Elon was talking about the other day on earnings call. Gen 3, the robots quite a step forward in those kind of things.
What do you hope Tesla has achieved that would make you proud as an engineering leader?
I mean, if you had asked me this question 5 years ago, I would have said, man, I hope we're still here.
Fair enough.
Yeah, and so now I'm going to say the same thing, man, I hope we're still here. Because, we take big swings, and sometimes that risk, it can come with a lot of downside. And I think we're in a big swing moment right now with autonomy, with robotaxis, and with Optimus, and with Semi, and I hope those all work out. And if they can all work out, and usually we get it right, and usually we get it done, maybe always on time. Yeah, I think it'll be great. Elon time, 2 weeks. It's hard changing the world, man. It's hard, dude. Sometimes it takes longer than you think it does. Sometimes you think you're right there and then you're not. And I think the next 5 years, we're going to look back and it's going to be like this massive turning point in transportation where before it was like...
Even when your room is 80 degrees, your bed can be 55. That's the a cooling cover that fits over your current mattress. It cools with water, not air. Circulated.
Somewhat of a burden, and if we can make it less burdensome and thereby more efficient for the world, we can hit the mission, then I think I'll be mind blown. I see that future. I don't believe it's going to happen sometime. But, if you want to change the future into something you want, you have to decide what it's going to be and then just go do it. And that's what we do at Tesla.
Yeah, what's the most important thing that you've learned from Elon? The first thing I learned, it's hard to miss, but it became almost the founding premise of our new firm called Future Ventures, is the power of a compelling mission, right? I want to make sure we don't underestimate that. When someone shows up to work at Tesla or SpaceX or any of the companies, they understand the long-term dream, what the company looks like 20 years from now. There are many startups for which that is not the case. Right? In fact, I asked entrepreneurs all the time, what's your company look like 20 years from now? You get
fucking hawkeye.
Three different answers. Either thank God you asked me that question. That's the thing I've been wanting to talk about all day. Or they laugh. 20 years from now, my third startup. This is not passion. I didn't have to dream for 20 years. So a long-term mission, making humanity multiplanetary, ushering in an era of sustainable energy in transportation, aligns employees in the long term. So if you just say we want to maximize shareholder value, which is a very vapid, fabulous goal,
Jeez, that was stupid.
People are going to debate endlessly. Well, this quarter, this year, this decade, which of these are we optimizing? Because we have different answers what we should be doing. And a lot of disagreement will break out as to what's priority. Whereas when you have a clear mission, it aligns people, and then you chain back to the present and think, what do I need to do to get here from there? So that's one of them. The second one I'll just mention more briefly is what I alluded to as process learning. This idea that the machine that builds the machine, as a metaphor, the rate at which you can run experiments and that learning.
We are on the cusp of self-improving artificial intelligence. Every week we are seeing new projects in which AI is able to discover new knowledge, new math, new science, and apply it to itself. We are just at the very beginning of it. But today, we have a brand new paper that claims to be the AlphaGo moment for model architecture discovery. What does that mean? What is AlphaGo? I'm going to explain all of it right now. It is such an exciting time to be alive. Okay, so let's start from the beginning. Right now, the biggest bottleneck for scientific discovery and even more specifically, AI discovery is humans. Humans are the ones that are coming up with new ideas for the ways that AI could operate. When OpenAI introduced the thinking capabilities for models, that was an idea from a human. When the Transformers architecture was invented, that was an idea from a human. But if AI innovation is limited by humans, then we can only ever linearly scale AI innovation. But we don't want that. We want exponential scale. We want to remove humans from the loop in this case and give these models a playground to hypothesize new ideas, test their ideas, and validate them. And that ushers us into the era of the AlphaGo type innovation curve for artificial intelligence. All right, so what happened with AlphaGo? AlphaGo was a project out of Google in which they trained an artificial intelligence model to beat the best humans in the world at the game Go. This was an incredible moment in the world of AI. And what made it really special was move 37. This was a move done by AlphaGo in which at the moment the move occurred, all of the experts looked at it and said, well, AlphaGo failed. It is definitely going to lose now. But over the course of the game, it became clear that that was an absolutely pivotal move that humans couldn't even comprehend when they saw it. And that's really the key. When AI is able to self-play and have basically unlimited compute resources thrown at it to try so many different combinations of winning and losing moves, it learns to play on its own. It is not based on a human expert telling it what a great move is or what a bad move is. It is simply trying it itself, playing millions and millions of games against itself, and each time getting a little better. And that is a key element of what makes this new system so special. When AI is able to learn on its own without human input, it is able to discover things that humans couldn't, or at least haven't. It is able to see things in novel ways, unencumbered by the weight of the way humans have always done things.
Choose from 1,500 plus locations and get up to 15% off on Motel6.com or My6 app. Wherever you're going, we'll leave the light on for you. Book on Motel6.com or download the My6.
Box has been a fantastic partner to us, so I want to tell you about Box AI. With Box AI, you can leverage the power of the latest frontier models from OpenAI, Anthropic, and even open source models to build incredible workflows on top of all of your documents that you already store in Box. Whether you're extracting key metadata fields from your documents, parsing receipts, reviewing invoices, asking questions across your thousands or even hundreds of thousands of documents, all of it is possible with Box AI. And the best part is all of this is possible without having to build your own RAG architecture. It's just done for you. And because it's Box, you know they have enterprise own. And with this, so now back to this paper. It took the same approach, the AlphaGo approach of allowing AI to do self-play, and applied it to discovering novel AI architectures. And with this new system, it's able to hypothesize, code, test, and analyze entirely new model architectures all on its own. The only limitation is the amount of compute given to it. All right, so let me break down how this actually works. So the system is called ASI Arch. Now, one thing I kind of have an issue with is they are calling it ASI, Artificial Superintelligence. I don't know if I would categorize it as that, and that word is certainly loaded. So first is the researcher. It uses a database of all previous experiments. It proposes an entirely new neural network architecture, inspired by both past data and human literature from websites like arXiv. Very similar to the paper that we reviewed a few weeks ago called the Darwin Girdle Machine, this one picks the top performers as parents and other strong entries as references when designing new architecture. So it chooses the best ones, then comes up with new proposals based on the previous successful ones. Then the engineer gets to work. It implements the researcher's ideas in code. It runs the code, trains the model, and catches and fixes any errors automatically. And this makes sure that any new novel approaches aren't just thrown away because there's bugs in the code. It actually just self-heals the code, makes sure it runs, and then determines, is this a good approach or not? Then we have the analyst. The analyst reviews the test and training results, the logs, and performance against benchmarks. It thinks about why a model did or did not work, and learns insights that it can apply to future generations of models. And it actually maintains a memory of all of these insights and lessons learned. And so that evolutionary loop happens over and over again. And this seems to be the favored architecture of these kind of self-learning systems. All right, so was it successful? Was it able to actually produce any novel ideas for architectures? Well, yeah, let's take a look. So it ran 1,700 autonomous experiments, over 20,000 GPU hours. Now, if that sounds like a lot, it definitely is. But remember, it's not only outputting all of the tokens necessary to write the code, to create the hypotheses, to think through it, but it's actually creating the models, running the models, and running them against benchmarks. 106 of those models were actually better than previous versions of models out in the public. But here's why this system and removing humans as the bottleneck in this system is so exciting. Now imagine rather than 20,000 GPU compute hours, we had 20 million. And also imagine we can do all of that in parallel. All of a sudden, the ability for us to discover new innovations to improve our artificial intelligence becomes exponential. All right, so what does this all mean? Now that we kind of have hints at what a self-improving artificial intelligence system looks like, now we just need to improve it, and we just need to throw compute at it. That is the only bandwidth limitation we have at this point. And if it can work with AI discoveries, why can't it work with biology discoveries and medicine discoveries and basically any other type of science? There is no reason. And at that point, once again, we just need to throw compute at it. And the best part, they open sourced everything. The paper, obviously, the code, the experiments, everything has been open sourced. So this is a super exciting paper, a lot of implications from it, and we have multiple companies that seem to be publishing self-improving AI papers. Alpha Evolve, which yes is by the same team that made AlphaGo. We have this one, we have the Darwin Girdle machine, we have the AI scientist out of Sakana AI. So much to be excited about. If you enjoyed this video, please consider giving a like and subscribe, and I'll see you in the next one.
Son of a bitch. You're too far away. You're too far away. Dogs blind. That was a blue spider. So, baby girl, what about the incident? What did I do? Okay, something about. Ah. I feel like I did this. Wasn't it? Oh, well, listen. Podcast. Jeez. Let's go, buddy. That was alright. Don't feel like it. I'm still playing shitty. God, that was fucking shit again. Next, I could fucking shoot this fucking thing.